Welcome to the Talent Empowerment Podcast. We're here to help you love your job. We unpack the tools and tactics of successful humans to guide you towards your own career empowerment. I am your host, Tom Finn, and on the show today we have Jim Downs. Jim, welcome to the podcast.
Thank you for having me, Tom. Looking forward to it.
Well, let me take a moment to introduce you to Jim. He is the founder of Blueprint CFO. It's a future-focused accounting and CFO services firm based in beautiful Southern California. Jim has served business owners and management teams for over 20 years as a veteran outsourced CFO and financial advisor. He is a forward-looking strategist. He has a passion for working with business owners that led him to open up Blueprint CFO in 2019, where Jim and his team leverage data, good old-fashioned data, to look to the future and help clients achieve their profitability goals. All right, let's start here, my friend. Where do companies go astray when they're thinking about financials?
Typically, and I hate to say that word typically, but my experience is working with entrepreneurs that they don't use their financials to run their business. Especially in the lower middle market, the financials are used to file their tax returns at the end of the year. But during the year, they may get their monthly financial statements and look to see, was there a profit? How much cash do I have? But they don't really dig into the details of the data that is telling them what's working and what's not working in their business. And so that is one of the reasons why our mission at Blueprint CFO is to make the entrepreneur pay attention to what the data is saying is going on in their business that they need to take action about.
Okay, that's fair. So what are some of the details that we should be focused on as entrepreneurs?
There's a couple of things that come to mind when you ask that question. One is sales and marketing. So typically, clients are spending X amount of money every month on sales and marketing. And some of it, you've heard the old adage, I know half of my marketing is working, I just don't know which half. So, but there's ways to dig into, how many leads are you getting through Google clicks? How many leads are you getting through your website? How many leads are you getting through your referral network? And identify where you should be putting your emphasis. I was with a client yesterday as an example. They're spending $75,000 a month on sales and marketing. And and it's not a big company, but they have no idea, where they don't have any kind of data that says where the leads are coming from with respect to all the things that they're doing. They're doing direct mail, they're doing email marketing, they're doing pay-per-click, but nobody is actually taking a look at that data to say, how can we spend that $75,000? First of all, do we need to spend $75,000 a month? Or secondly, if we are going to spend that much, how can we spend it better and smarter?
Yeah, look, $75,000 a month is a monster sales and marketing budget. I would hope that if somebody's spending that kind of dough, that they are pretty acute in terms of the data that they're looking at and they understand where their customers are coming from. But I think for most of us, Jim, it's the same old problem, right? It doesn't matter if you're spending $750 a month or $75,000 a month. You need to understand where the business is coming from. All right, that's fair. Sales and marketing, number one. What else should business
I think
owners be
another
looking for?
one that people just kind of forget about is labor productivity. So in most companies, labor, payroll is the biggest expense.
Yep.
Your people. And over time, you're spending X amount of money on wages. You want to generate more revenue from those wages. What I call labor productivity. So how many revenue dollars are you generating per labor dollar? And again, it's a very simple metric that nobody pays any attention to. And they keep adding people to their company and not paying attention to the fact that their revenue per labor dollar is going down and not up. We want to see that labor. We want to see, if we're going to spend money on labor, we want to see an increase in the revenue that's generated from the labor dollar. And typically, nobody's paying attention to that.
Yeah, so let's break this down a little bit because I think what you're saying is super important. So the title of this is labor productivity. How does one come up with the labor productivity formula in this case? What are the basics?
Well, I mean, a very simple way to do it is take your total payroll and divide by your revenue. More sophisticated ways to do it is if you have a manufacturing company and you have certain people out in the plant floor manufacturing products, how many dollars per revenue are those people generating through their manufacturing work? So each client's different, Tom. So there's not a way to say this is the way you should do it for your company, but in general, you want to be paying attention to that. It goes back to the what most entrepreneurs get at the end of the month is a balance sheet and income statement, and that's it. And there's no other analytics that they get that tells them what's going on in the business. And that is not sufficient to give you the data you really need to know, how you're doing. And so when we work with a client, we give them a monthly financial package. It's about 10 pages long. At the very back is the balance sheet and income statement. But in the beginning are all these charts and graphs that are showing these kind of metrics that they typically aren't paying attention to, because number one, you're getting a financial statement just for the month of July, for example. But how does July compare to June? And how does July compare to May? And what is the trend that's going on in the data that you're maybe not paying attention to because you're just looking at 1 month? So there's just a whole plethora of things. I'm just touching the surface of the data that people should be looking at when they're running their business, and each company has a unique set of data, and that's what the CFO should be helping the client identify. Is for your kind of company, an e-commerce company is going to have a different set of data than a software as a service company, or as a professional service company, or as a contractor, a construction contractor. Each type of business has a different set of key things that they should be watching every month. And that's one of the things that the CFO brings to the table. I've worked with over 200 companies in my career as a fractional CFO, so I've seen a lot of different industries. And if we added up our 6 CFOs and all the companies that we've worked with, is probably 400 companies. So by having that kind of experience, it goes way beyond accounting. It's really, where do companies go awry, and how can we make sure that our client, does well and does not make the mistakes that we've seen other companies make.
Yeah, so you brought up accounting. So help those that are not financial wizards figure out this whole map: accounting versus finance versus tax versus bookkeeping. How does this all come together? What should we be thinking about?
So the accounting is important. In my mind, there's 3 things that are going on in every business that need to be paid attention to. One is sales and marketing. Secondly is operations. And third is finance and accounting. But typically, clients are very focused on sales and marketing and operations, but not so much on finance and accounting. When we get engaged with a client that is interested in potentially getting a CFO involved with their business, they really have no idea what that even is. And a lot of times the client thinks the CFO is like a super accountant. They're an expert accountant, but that's just the starting point. You have to have great accounting to know how you did in a particular month. And if you're not matching your revenues and expenses correctly, you're gonna look like you made money 1 month and lost money the next month and made money the next month. And when you go to get a loan from the bank, they're like, well, I don't know if this company makes money or not, and whether I should make a loan or not. So the CFO, number one, is responsible to make sure the accounting is accurate and timely. So that means you're getting your financial statements by the 10th to the 15th of the month every month for the prior month. But then going beyond that to dig into the data and bring the data to the entrepreneur that shows them, things that are going on that maybe they're not aware of because they're not digging into the details.
Yeah, I think the details are super important when we're thinking about the financials. You got to know your nums, right? I mean, you got to know the numbers. You've got to be ready to figure out which way to point your company, which direction to point your company in. So how do we figure out if we're not making money yet? Let's say we're early stage. Let's say we're in the first couple of years. We're spending more money on sales and marketing, more money on operations, and we're actually in a negative position. A negative monthly cash position. How do you help organizations figure out how to get out of that?
So At one point in my career, I was the CFO of an internet startup that was based in Santa Monica, and I was meeting with venture capital firms all around California to get funding. And I'll never forget, a man told me once, Jim, it's all about concept to cash. And I'm like, what does that mean? He goes, well, you have a good idea, but until it's generating positive cash, it's the faster you can get from your idea to generating positive cash is the trick. And so if a company is investing in building a future, by launching a new product or service, they need to be very careful to keep that in mind in terms of getting to positive cash as fast as possible. So that might mean, we've had clients that want to launch new technologies, as for an example, and there's no revenue that's going to be generated from that technology till it's completed. But in the meantime, maybe they can be doing consulting to supplement the cost of the labor so that at least they have some money coming in, and they can get to positive cash flow faster than just spending all their time doing development and burning cash along the way and having to rely on the good faith of investors that they're going to get there someday and that the customers are going to buy that technology. So that's tricky. I've been there myself.
Yeah, I love
A
this
good
idea.
financial person sitting next to the entrepreneur is super helpful in terms of helping them, manage their cash and assure investors that the financials that they're being given are accurate and that there's somebody watching over the money. So even at a company that's in its startup mode and or burning cash, typically there's a lot of benefits to having a CFO involved.
Yeah, I love the idea of concept to cash. Makes a lot of sense to those of us that have started business that you have to get into a positive cash flow position as quickly as you can. When you think about looking at the numbers and trying to understand what's going on in your business, how often do you recommend CEOs, leadership teams actually look at the numbers? Is it monthly or is there some other rhythm?
Well, monthly is a minimum, because a whole month is a long time, in my opinion.
Mm-hmm.
But we provide our clients with weekly scorecards, which show them data that comes not only from the accounting system, but from their CRM or their ERP, their inventory management system that tells them every week, what's going on in the business and whether they're going to hit their goals for the month. So a lot of times clients don't know how they did for the month until everything is recorded at the end of the month. And many times, a lot of the activity that gets you to your goals occurs in the last week of the month. I've seen that many times. So having a weekly report that shows how you're doing and whether you're on track to achieve your goals or not is super important. And it could all be, I hate to use the word AI, but it all can be automated because we can set up a bot, in effect, to create a scorecard that is sent out every Monday morning to the client that shows how they're doing at collecting their receivables, how many hours are being generated by the operation team, that what the labor cost is going to be for the month, yada yada yada. There's just all kinds of things that they can get very easily every week, and that's been very popular with our clients. Not just relying on the monthly financial, but getting some kind of weekly report.
Yeah, look, I love how proactive that is. I think that's really what makes this sound interesting because as somebody that started companies, I run a multi-million dollar company called Leg Up, and I get my financials on the 13th day of the following month, and then I look back and go, oh, that's what happened in July, or that's what happened in September, right? And I just have to be reactive at that point to say, oh, we spent more money than I expected, or we didn't spend more money, or we were profitable by a different margin this month. And it's just kind of a tough way to operate, to be honest with you, because you're always looking in arrears or in rear view mirror, right? Going, oh, what happened? Now let's plan for the future. So is it the weekly scorecard that gets you out of that rut, or is there some other behavior, Jim, that we should be doing as business owners?
Well, let me start by saying I signed up and tell you a little story. So I signed up a new client last year, and they're a fairly large company, close to 100 million in dollars of annual revenue. I signed them up in June of 2022, and they had not finished their financial statements for December of 2021. So they did not have financial statements for January, February, March, April, May.
Yikes.
And the owner felt that that was okay because every morning he would come into work and log into his bank account and see how much cash he had. And that's how he was running the business. And so when we got all done getting everything up to date, I brought to his attention that the money he was spending on temporary labor had doubled from 2022 from 2021, and he went epileptic and got the phone, called up the head of the warehouse. Hey, Joe, get up here. Do you realize our temporary labor is double what it was last year? You got way too many people down there. So that's just a mini example. Most companies are fine with not getting their financial statements by the middle of the next month. You're doing better than most companies, but it's I think because so those kind of things when you get involved with a client and you help them see the visibility to those things that are going on that maybe they're not aware of, that's where they become more interested in data, and it's an education. I mean, some people don't think they need it, and you need to kind of walk them little baby steps down the road to get them to get attached to the data and really want it. I have meetings with some of my clients. I'm working with 10 different companies right now, but I would say 4 or 5 of them want to meet every week and talk about what I'm seeing going on in the data. And so they got their religion that I better not just wait till the end of the month and figure out how I did, or even if your sales are going to hit the target by the end of the month. What about your costs, or what about your inventory, or what about your line of credit? There's all kinds of things going on that need to be paid attention to beyond whether you hit your sales target or not.
For sure.
But it's not. I mean, some clients are more data oriented, and other clients aren't, and so you can only do so much. You try to educate them that there's a hidden gold mine here in your data that if you're not looking at it, you're probably wasting money.
So do people hire you, Jim, and your organization when they have a CFO? Because 100 million or even 10 million or 15 million, that's a lot of money in revenue. And are these companies that have an in-place accounting and they need somebody to look at the numbers, or do they have sort of a younger CFO that may need some support and guidance and development? Like, how does it actually work when you're working with an organization?
So we have, I wouldn't know, but I would say about 20% of our clients have an internal CFO. So they do hire us because we are more strategic in our focus and looking to the future. So, this is kind of a hit on the accounting industry, but most accountants are what I would call historians. And they're incapable of thinking into the future. They're just trained that I need to get the accounting done. And when the accounting's done, I'll give it to, I hit my target, I'm done. Now I go on and do the next month. And they're not really trained to dive into the data and start looking at what's going on. With our young people, we have 12 accountants, and we all want them to be CFOs some days. And we teach them, when you give us a monthly financial statement, we want you to do an analysis of what happened, from this month to last month that's different. And, so starting that process of looking at the data and making sense of it versus just giving us a bunch of numbers. I call the balance sheet and income statement are a bunch of numbers. And I can show you some examples of, here's January, February, March, and there's all these columns and all these numbers. So like, okay, well, excuse my language, what the hell is going on? Because it's just a bunch of numbers. But the more you can make sense of it and make it usable to the client to take action, then that's the trick. But not all internal CFOs are good at that, because they're good accountants, and that may be fine. They're at least getting the accounting done. We just almost signed. We didn't sign this client up, but they had a CFO, and they when we delved into what that CFO was doing, he was really more like an office manager, and he was also managing the shipping department. And people are called CFO, but they're not really doing what a CFO should be doing, which is more the strategic focus, I think.
So when you think about strategy and your own strategy, Jim, you started this company in 2019. What was the hardest thing about building your organization early stage?
Um, so I came out of the world of outsourced accounting, and I worked for two different outsourced accounting firms, and they both wanted to add a CFO function so they could offer that to their clients. And I felt like that was kind of backwards. That really they should be selling the CFO function, and then the CFO can determine what accounting is needed. And so that was the focus of Blueprint when I started it. Was we are a CFO consulting firm. We don't just do accounting. And if somebody just wants that, I can recommend they go to some other place. But our goal is to be the financial advisor to the client, and there's really not a lot of companies that do that. There's people that give lip service to it, but in terms of actually having a defined process which looks at historical performance of the company and helping the client create a plan for improving their performance of their business and then managing that plan, which is the blueprint process. That was what I was trained to do when I was doing turnaround consulting during the recession, where you went in and looked at a company that was burning cash, like you said, and the bank is ready to pull the plug because they don't want to lend this company any more money because they've lost confidence that they know what they're doing. And so you need to come up with a plan that shows week by week how you're going to generate positive cash flow and get the loan paid off. And so was kind of the basis for Blueprint. Is the same thing for healthy companies. You don't have to be in distress, but healthy companies should be doing that because money is, paying attention to your dollars and cents is super important. And if you're not doing it, you're just going along hoping and wishing that you're going to hit your goals, you probably won't.
So, Jim, just to be clear, hoping and wishing is not a financial strategy.
No.
No. Okay. All right. Well, you
Well,
might have
people
ruined.
have goals, so Tom, I've signed up, I've worked with, like I said, 200 companies, let's say. I have never walked into a company and I've said, what is our goals for the year and what is our strategy, and give me that and a piece of paper. Never. And these are companies that are sizable sometimes, and the owner or the management team might have it in their head, hey, here's what we're trying to do. We're trying to expand into this geography, or we want to double our sales over the next 3 years, but it's never properly communicated and defined on a piece of paper where you can all gather around and get consensus that that's really what we're trying to do as a company, and then build a plan, build a metric around how are we doing at achieving that. So most entrepreneurs have these goals, but without a plan to get to the goal, it's wishing and hoping.
Yeah. I think corporate planning or business planning is so critically important. You have to set the strategy as the architect of the business. If you're the CEO, you have to set the forward-looking strategy for the company, and you've got to be 10 miles down the road in front of everybody else. You've really got to be thinking future state, which is what we all should be thinking about as leaders in companies. What is the future state of the company? How do I get us there? How do I bring in the right labor, the right marketing and sales strategy, the right ops, and then, of course, the right financial solutions to hit that target? That is how you build a business.
Most entrepreneurs do part of that. They don't do all of that. And
What part? What part do they do?
well, it depends on the part they like. So if they come from the sales world, they do a sales plan, and
Yeah.
that's all great. Or if they come from the technology world, they do a technology plan. But there's much more to the company than just sales or technology. I know where you do a lot of your work is in the human side of the business. The
Yeah.
human capital. Do you have the right people to achieve your goals? And how do you hold people accountable? And how do you set goals for people so that they know what they're expected to do when they come to work every day? That's the missing link. I can't imagine how much money is wasted in businesses because people come to work and they don't really know what their boss expects them to focus on. And it just happens all over the place.
Jim, I'm going to tell you a story because you hit the nail on the head. I work with a company, and they're a terrific organization, great leadership, just had a new CEO put in place, great group of folks, and they do not know what the senior leadership team does. The senior leadership team, if you were to ask them, does not know what their roles and responsibilities are. And it's a little bit of a mess in terms of how they organize their people and how the behaviors push the company forward. And so when you go into organizations like that, the key is first you've got to define roles and responsibilities and structure and really understand what the jobs are that need to be done. And then, of course, we have to layer over the financial component. But I think this happens all the time where people don't know what they're supposed to be doing.
I always tell the story. My wife and I like to go out for happy hour every once in a while. And this is 10 years ago or so, we went someplace, I don't even remember where, and we were sitting at the bar having a cocktail, and there's two young women sitting next to us, and they were having cocktails too. And I heard the one lady say to the other, I just wish, our boss would tell us what we're expected to do every day. It's very frustrating to come to work and not really know what our priorities are. And I think, man, how many times do people have that conversation all over the world? Because I know it's not clear a lot of times in terms of what the priorities are and how their job is being measured. So you're spending all this money on people to come to work every day, and they don't really know what they're supposed to be, what the game plan is.
How
That's
do
the
you
blueprint.
how do you overcome that, Jim? So as a leader of a business yourself, how do you overcome making sure that people understand their roles, their responsibilities, their client touch points, whatever it is? How do you deliver that message, and what do you do?
Well, so we sneak up on them because we're accountants. We're boring old accountants that just do accounting. But the cool part about that is we know where all the dollars and cents are. So, where there's no pain, it's hard to get people to see that, there's a different way to do it that's better. But where there is pain, that's where the dollars and cents are key to meet with the owner and say, you're not hitting your financial goals because of this or that. But if the company, going back to your example of the company that's kind of, like you said, a mess, it could be that they're super profitable and there's no pain. So, why are we changing anything? But how much better could it be if it was organized and focused? So, I think that, our goal is not really to be an accounting company. As you said in the beginning, we're a CFO and outsourced accounting firm. But really, the goal is to take those numbers and help our clients make more money and be more successful. That's what really we're up to. But we do it through the numbers, because when you're not hitting your numbers, then there's a impetus to change something. And in most cases, it's a lack of organization and focus that is causing the client not to hit their numbers.
Yeah, and in hitting your numbers, I'll tell you what we do. We have Monday morning meetings where we go through all of the sales information. We have operational meetings every couple of weeks, and then we have a financial meeting once a month. And that tends to keep us on task and our people on task. And we have sales meetings Mondays, Tuesdays, and Thursdays to try and make sure that we are meeting the expectations of our prospects, but also meeting the expectations of our clients, our in-force clients as well. So that allows us to have a rhythm and a pattern in meeting objectives for the company.
We have a tagline for Blueprint, which, if I say this tagline, you're going to go, how does that relate to accounting? Creating exciting futures. That's our tagline. And we're creating exciting futures by getting people to pay attention to numbers. And
you're making accounting sexy, Jim. Is that what you're saying?
we're making accounting relevant.
Okay.
Most accounting is totally irrelevant. And you do it to give information to your shareholders or to your bank or file your tax returns. But most accountants don't think about how to make the numbers better. That's not their task. It's not their interest. And I can tell you, most CPAs have no idea to do what we do. And the only reason that we're successful is because we've worked with companies, and that was part of our job, is to figure out how to help the company do better. But CPAs, they don't do that. They go in and make sure the numbers are validated and make a report, but they not delving. I was a CPA, and I found it very frustrating that I had no idea how my client was making money or not making money. And so that's what led me down this path. I had a couple of clients that said, hey, will you help us? Will you meet with us every month and go through our financials and help us figure out how to do better? But and when I started doing it, I had no idea because I really didn't know anything about their business. I didn't need to do an opinion audit at the end of the year or file their tax return. I really didn't need to know how they created revenue or how they compensated their salespeople or what kind of bonus plan they had or what kind of processes they had to make their products or how they managed their inventory. Didn't need to know any of that. So it's been a lifelong learning for me and a passion to, get into those numbers. And every time I get a new client, it's so exciting because now I get a brand new toy to look at, this company and how it's performing and see how I can help it perform better. That's
Yeah,
the creating the exciting futures part.
beautifully said, man. You are clearly a forward-looking strategist, thinking about the future for your clients, thinking about finance and accounting in a little different way, in being more than just looking in the rearview mirror, but much more looking at the future and thinking about this as a strategic operation, which I love. And I think it's a great way to look at the world. Jim, if people want to get in touch with you and connect with you, learn more about your business, get in touch with folks at your organization, how would they go about doing that?
Well, to get more information about the business, you can go to our website, which is www.blueprintcfo.com. And there's a lot of different case studies, and there's a way for you to connect with us and do a free 1 hour meeting to talk about your business and see if there might be some opportunity for us to help you. But beyond that, my cell phone number is 949-405-5440, and I love learning about new businesses. So anybody that's listening to this and is interested, give me a call.
Yeah, and we'll put that in the show notes. So if you're driving, please do not take your eyes off the road and your hands off the wheel. We'll make Jim's cell phone number clickable in the show notes, and also make sure you can get to the website. Jim, thanks for being on the show, but more importantly, thanks for looking at the world a little bit differently, empowering other businesses to be successful based on your view of future-looking statements. Appreciate you, my man.
Thank you, Tom.
And thank you for joining the Talent Empowerment Podcast. We hope you've unpacked a few tips and tricks to love your job. Get ready to dive back into all things career and happiness on the next episode. We'll see you then.